I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner, colleague, and friend, Mr. Nick Hodge, who's also an investor and the publisher of Daily Profit Cycle. This is the 269th episode of our weekly therapy session that we like to call Investing in Bizarro World. We're going to talk markets. Everything is awesome. All of us are smart. We're going to talk about things we're looking at, some of the crazy stuff that's going on around the world. Missiles and copper, Mr. Hodge. We're going to talk missiles and copper. Who would have thunk it? But before I get into all of that, how are you today, sir?
Missiles and copper sounds interesting. I'm game. I'm doing very well. It's our first 70-degree day here in Spokane, Washington. Got the vitamin D going, all the spring activities, and the pool is now open. So, getting those spring and summer vibes, getting ready to go. How are you?
Same. Been, traveling. I have a little more travel left here in the next little bit. But look, making the most of it. Spent a weekend in Vegas. Had a great time. Went and saw the Canelo fight. Had a blast with the wife. And then, so that was great. Was lucky enough to be in Costa Rica the week before. Had some friends that were renewing their vows. So hilariously, I officiated that. So that was fun. And look, everything is awesome. We're smart. I read your issue earlier, and look, everything is green, right? Copper's green, gold is green, the Dow is green. About the only thing that's red is the dollar index, which not coincidentally has dropped very proportionately to the gold price. So why are we smart again, and why is everything awesome again, Nick?
For the reasons that we've been saying, it's nothing new that popped up in the past 7 days. It's economy is continuing to grow in China, expanding, multiple European economies expanding, rate cut you got in Sweden, I believe it was. Couple that economic growth with good earnings on the S&P, like sort of the best earnings growth in the S&P since early 2022, which is now 2 years ago. And then, you pair that with ongoing inflation, which is going to be and has been higher for longer. You'll get a new CPI sort of this week, the May 15th. That'll show you it's closer to 4% than 2%. And that means, a higher inflation, which means it's sort of interesting. It either means or it's begotten from higher commodity prices, right? So however you want to sort of look at it, but oil at $80, copper at $460. That's a good environment for, rising commodity prices. I wrote an entire 3,500 word monthly issue this week, and I didn't mention the Federal Reserve or Jerome Powell one time. And that's what I've sort of been saying, is that these macro factors, and even to a certain extent, micro factors are what's dictating the market right now, and that's just sort of what it is.
It's funny. We had the conversation last week. I was looking at the text of it, and we talked about whether or not the market was going to front run the eventual rate cut, right? And I have to believe there is a little bit of that going on, right? If we're going to have, I think we're going to have, a CPI print here soon that is favorable to Jerome. I'm only basing this on very, very limited sample sets. I've been talking to the gentleman that's building our pool and his company. And, he's been at this for some 30 years, active in the real estate market, has several properties, he's got 12 pools he's delivering here just in the month of June. And so he started asking me about the economy. And I said, well, let me ask you about it. What are you noticing out there? And he said, look, I've had a house for sale. It's been 2 months now. And every time I've put a property up for sale before, I had 10 offers in 2 days. He said, and people are starting, to realize, well, if I'm getting 5% from my bank for my money to sit there, but the mortgage is 8% for the people that have to take a mortgage, I'd rather just sit put, right? And I'd rather just wait. And I think, that's going to continue to be the case for the next couple of months. And I do think Jerome ends up with a data set. And if he doesn't, frankly, he's going to manipulate it, as they always do. But I do think he gets a data set that is favorable for him to say, okay, I saw what I needed to see. Inflation isn't all the way down. But with the debt levels we have, Nick, there's no way they keep these rates this high for much longer, in my opinion.
Yeah, I don't know. I mean, if he's data dependent, the inflation isn't in his favor. The job market doesn't need a rate cut. The stock market doesn't need a rate cut. history says they don't cut by and large in election years. He wants to remain independent.
Yeah.
I'm not sure. I mean, I know what, sort of not, everyone else knows. We came into this year looking for 3 rate cuts, and that sort of dissipated. And now the market is pricing in 0, perhaps maybe 1 later this year. I don't think he intervenes in the market. I don't think he wants to. I mean, this is just sort of, talk radio stuff now. I mean, I don't think he wants to help Biden. He's a Trump appointee, right? I mean, this guy's a Republican. So, no. I mean, I don't think you get much Fed action the rest of the year. And I don't think that's what the market's trading on. Like I said, to open this up, I think the market's trading on, good fundamentals, good macro signals, et cetera. Yeah. So, I don't know. I don't know.
Interesting times. Again, everybody's smart, and we don't know why we're smart, but Weeze is smart, Nick. Weeze is smart. There's a lot of greed in the portfolio. And look, let's talk copper. I talked about copper and missiles, and you sent me a really interesting link yesterday, I believe, earlier this week. It's been a long week, folks. It's been busy. There's a lot going on. But it was basically the prospectus to a fund that's out there, and I hadn't seen it before. And of course, I started digging into what's in it, and it was interesting. It was like defense stocks and gold and uranium and some other things in there. And I thought that was curious. I hadn't yet seen a fund that had that type of allocation within it as far as its holdings went. And then I read a comment from Stanley Druckenmiller, and hedge fund giant, brilliant investors, got a track record of serial success, manages a lot of money. I'm not talking like tens of millions or hundreds of millions. We're talking billions with a B. And his comment was interesting. He said, copper is a pretty simple story. It takes about 12 years from greenfield to produce copper. And you've got EVs, the grid, data centers, and believe it or not, munitions. These missiles all have enough copper in them, and the world is getting hot. We just think the supply-demand situation is incredible. And so when the I want to keep calling them the Drunkenmillers because it's funny, but I won't do it. The Drunkenmillers of the world start talking copper and missiles, and funds like the one that you sent over start adding defense stocks and aerospace stocks and uranium and, copper into their holdings. Man, again, from an investing perspective, from a speculator perspective, from a capitalist perspective, it makes me giddy and happy because I think our thesis is going to continue to play out the way that we thought it was going to play out for the next several years. As a human being, I gotta admit, Nick, it worries the heck out of me that we have all of these funds and all of this capital eager to back the defense stocks and eager to back copper. And part of that thesis being the world's getting hotter and these missiles are going to keep dropping. When there becomes an even bigger financial incentive outside of just the defense companies that are always there to make a killing, literally and figuratively, that's one thing. I expect that from them. When I start seeing funds start being created and allocations and holdings pivoting towards more war, as a human, it makes me worried, Dick. And again, this is just, it's a podcast, right? These are our thoughts. These are my opinions, but we're in the midst of a fourth turning. I don't think it gets better anytime soon. And buckle your seats, folks. I think it's going to be a hot couple of years.
I mean, a couple of things to unpack there, right? So I sent you that ETF link because it was interesting to me that it's FAANG 2.0. That's what that fund is called. You remember the FAANGs, right?
Sure.
Of course, we remember the FAANGs. Facebook, Apple, Amazon, Netflix, Google, right? But now we have the Magnificent Seven, so I'm just making sure everyone remembers the FAANGs because we've sort of moved on from that a little bit. And we've long said that we're in a commodity super cycle and we're entering a new phase of it. And even, sort of before the commodity super cycle, it was time for just the capital cycle in general to move away from tech and more towards resources, right? There's like long-term capital charts that sort of show these flows. And there was, lots of investment in R&D and technology. I mean, just look at all the AI stuff and tech stuff that's going around. That then starts to go the other way. I'm talking about long-term, 30 to 50-year capital cycles.
Sure.
And in fact, And then I'll just give you an example, and then I'll move on to the next point I wanted to make. Like Meta has been punished over the past couple of weeks now because of that R&D spend. The market now doesn't want these tech stocks spending that money. They want them profiting, right? And it was either Druck or one of these other guys that was out there this week also saying that, this AI trade might be getting long in the tooth. They could see a pullback akin to the 1999 sort of dot-com crash after these valuations got ahead of themselves, okay? What was the other point I wanted to make? So this is FAANG 2.0, right? If capital is going to rotate back into things you could drop on your foot and war stuff, that's what this is about. So it's these F's are fuel, and then agriculture, aerospace, nuclear, and gold. That's what this FAANG is. Copper is inside that. We know, obviously, that there's these, long-term structural deficits of copper. We're well aware of that scenario that, these gold companies either replace their reserves. You started talking about the war and the missiles. So yes, you need inputs for war. But I too started thinking about the fourth turning when you were saying that. So one, we know that typically culminates in an all-out war, whether it's domestic or international. And certainly there's a case to be made for international war right now. I mean, there are a couple, conflicts going on. But this is just an interesting philosophical thing. As I get older and, think I understand the world more and look at these cycles and understand, the role the U.S. plays in the world for better or worse, you don't want to lose whatever conflict is that's coming up as well. And so, these funds' willingness and these defense companies' willingness to, allocate capital to copper or to critical metals or, whatever it is ultimately also what keeps that dollar index, back to aircraft carriers, right? Above 100, above 106 allows us to dictate terms financially, allows us to X, Y, and Z, right? And also keeps us, relatively safe inside our shores. So all those things are connected. And it's quite a big topic when you talk about, 30 to 50 year capital cycles and then demographic cycles and war and drill that down into, Meta earnings last week. I mean, that's a wide gamut of things you're talking about, right? But that's sort of how I see things going on and how I see them connected. And you say, we don't know why we're smart, but we are. It's just sort of, the cycling, right? And, it doesn't always cycle in the same direction, but the overall direction is the one that we've been calling for. And so I think our thesis is right. And now it's going to start playing out, more right than not, though it's been tough in the past couple of years, right?
No, look, you and I share a friend and a mentor that, has told both of us that, specifically in the resource space, he's in it to make money for 2 years, every 10 years. And, what he always says is the money I make from the 2 years makes the other 8 years not be worrisome to me. It's well worth the wait when you get this type of cycle. And when we're at this part of the cycle, I just, wrote, you were mentioning your issue. I just wrote the same 4,900 word monthly issue. I'm touching on where we are in the cycle. And again, why my capitalist heart smiles. And the reason it smiles is because, yes, some of the equities are finally starting to wake up, but they're still the exception. They're still the exception. And so the baseline from which these equities are coming out from is so low that, there's a couple of companies. Cucho Copper has an asset right now that's got a net present value at current prices of roughly 700 million Canadian, give or take. It's got like a 15 or 20 million market cap or something ridiculous like that. Now, should it have a 700 million market cap? Of course not. You got to discount, cost of money and the time lag and all of that. But it sure in the heck shouldn't be a 15 or 20 million dollar market cap if you have a copper asset that's got a feasibility study attached to it, excellent exploration upside in a great jurisdiction. That type of disconnect, again, makes me smile, not just for myself, the greedy part of me that wants to make money for this cycle, but for friends, family, and subscribers that, hopefully are able to profit really, really well over the next couple of years to make the lean years worth it, because there's always going to be lean years. I ended the issue by saying this is not the time. Keith McCullough's one of his best phrases, right? This is not the time to be doing nothing. This is not the time to be doing nothing, folks. This is the time to be doing something. And that something is getting out there and allocating capital to some of these companies because they're going to make us a lot of money in this cycle.
Yeah. I mean, yeah. well said. You can see, there's some of these stocks. I mean, you mentioned Kucho being undervalued. Some are starting to take off. Like I was asking you last week about Power Nickel. That's a stock that's gone from like 20 cents to 60 cents in a couple of weeks. Yeah. I mean, straight up, right? And so they have a lot of ground to make up when they do keep going. And so anyway, hopefully getting to the part of the cycle where you see more of those companies starting to take off like that. And have done your research, I guess, is the other thing I said. Like I'm pretty confident in the names that I own, and I guess the quantity of them I own is the other thing I would say. You've had time to really do your diligence and concentrate on positions, and so hopefully you've done that, or following people who help you do that.
Agreed. We'll get into some of the other companies that we're watching that I really like. That of course, I'm biased. I'm not going to mention a company if I haven't allocated capital to it or aren't looking to do so, right? But I want to get back to the commodity space. We touched on copper a bit. That clearly looks bullish to me. I do want to touch on gold a bit. Technically, it looks beautiful to me. You're more the chartist than I am because I'm mostly not a chartist or a technician when it comes to trading. I take more the macro and the micro and go that way with it. But what do you see technically on gold for it to break out from these levels? Because again, that 2,300 floor held in beautifully, and we're at 2345 the last time I checked today, looking really, really sexy to me.
I mean, gold is bullish all the way down into the 2200s. It's really settling into the $2,300 level here. Let me just take a look for you. Where the hell is it? Yeah, I mean, you need to get north of, sort of 2370 to get to the next level up, which is probably around the $2,500 mark. But, firmly bullish, I guess, is, I guess I would retort that you don't necessarily have to look at the technical levels right now. You are in a gold bull market. I mean, it could go all the way down to the mid 2200s and remain bullish. And again, it's done this with, the 10-year at 4.6 and the DXY at 105. So, those are your levels if you need them, but gosh, it looks like it wants to get to the top side of that. What I just said, I didn't look where it was at the end of the day here.
2345, sir.
There
2345.
You go. So it's not far away from 2370 there to get to the top end of the sort of level where it needs to break out.
I got to get your technical thoughts on silver. Up some 4% today, closed at the 2830 mark. It looks like it wants to breach that 30 level to me from my amateurish eye over here, but I want to get your take. Look at the chart, Spurs, Nick, and then which way is silver going?
I mean, it's going higher. It needs.
There we go. Easy work.
Yeah, I mean, it's so. Gosh, I'm going back to 2020. It bounced off that $30 mark twice. It did that once in August 2020, again in February of 2021, and then it just did it again here in the beginning of April. Sorry, you put me on the spot. Let me see. I mean, it's close. I mean, it's right there. I mean, it's over $28 now. If it holds this 28 for a day, it's going to try to knock on 30 again, I think. So, yeah, this precious metals complex is getting bullish.
I like it. We had to talk uranium. I mean, we said we thought that the uranium pullback was over. We said that for the last 2.5, 3 weeks, sitting pretty at 92 and 93. It looks like it wants to break 100 again. And if it does so, I think it hits 120 rather quickly. If you all recall, it went from 20 to 60 pretty quickly. Then it pulled back a bit. Then it went from 60 to 75, pulled back a bit. Then it went to 110, pulled back a bit. This last move here, the last week and a half, is looking really good. And a lot of the equities haven't yet recovered from the latest retracement, which again was a healthy one. And leads me to my point here. You're going to have healthy retracements even in the most bullish of commodity cycles, which I believe this is going to end up being the most bullish of commodity cycles that I've seen in my career, right? I've been trading and investing and allocating capital in the resource space for roughly 15, 16 years now. And I think this is going to by far surpass any of the bull markets in the past. But retracements are healthy, folks, healthy pullbacks. And so I would caution everyone out there that here's me be optimistic and here's Nick be optimistic and talk about the amount of, capital that I think we're all going to make in this cycle. that you're still going to have pullbacks, and pullbacks are healthy. The last thing you want is a hockey stick chart, right? That never is healthy. And those always tend to be the ones that hurt the most on the way back down.
It gives you something to navigate as well. So I've done a bit of buying and selling in the uranium space, and it's a sort of a small nexus of companies as well. There's, only a couple of dozen names that you really have to look at. So we've been saying for the past 2 months that uranium was consolidating and it needed to pick a direction to break out. You just said that looks like it's to the upside. I would agree. And I'll just write you a quick uranium editorial because I was writing about it this week and it's pretty fresh in my mind. So the first thing that happened was, let's talk about the demand side for a second. The Southern Company, which is a big utility in the south of the United States, they brought on the final unit of Vogtle. So they built 2 new AP1000 reactors, and the second one just got connected to the grid in the last week of April. That's a big fucking deal, to quote a politician. To get a new reactor connected to the grid. Those were the first 2 new reactors in quite some time. And it's not nearly enough. So the next thing that happened was Uncle Joe said that he wants the TVA that's the Tennessee Valley Authority, to also build some nuclear reactors. He wants them to lead by example, hearkening back to FDR and the founding of the TVA, providing energy to the southern part of the country when utilities weren't willing to go in there and build infrastructure and CapEx projects. So the TVA already owns, I think, 7 nuclear reactors. The Biden administration is trying to get them to build another one, the same one that was just built by Southern Company, an AP1000, along with 2 smaller reactors that are made by GE Hitachi, and he is wanting to give them direct cash payments from the Inflation Reduction Act to do so, to get these reactors built. There's a little bit of red tape.
It sounds like socialism to me.
The TVA is a whole thing that I'm not an expert on, but it's a corporation. There's shares, but the shares are owned by the federal government, and the board is appointed by the White House. So it is an interesting corporation structure for sure. Socialism, if you want. And there is some red tape, like Congress has to raise their debt limit because it hasn't been adjusted for inflation. But anyway, I'm talking from a signaling perspective now. You've got the federal Democratic-led government wanting to build new reactors. And then this is interesting. So, sorry, I'm hogging the mic, but I figure while it's in my head, I'll get it out. In your home state of Texas, ERCOT has put out a new statement, plan, whatever you want to call it, saying, oh shit, we need a lot more electricity because of all the things that right? Musk is building factories, Intel's building factories.
Samsung's putting $40 billion into a new factory 20 minutes from me.
Exactly, right. So listen to this. And ERCOT, we've talked about on this podcast before when we talked about, freezing and overheating of assets in Texas, et cetera. Well, there's a company called Vistra Energy. Have you ever come across it down there in Texas? Vistra Energy? It's a utility. So it was added to the S&P 500 this week. Vistra Energy. And it has, so far this year, 2024, the year of our Lord, it has outperformed every other stock in the S&P. It's outperformed 499 of the other S&P stocks, and it is an energy provider in Texas. Planning to provide increased electricity to these Samsung factories of the world. Where, pray tell, does Vistra Energy get its energy from? Well, in March, it acquired a company called, hang on, wait for it. I have it in my notes. Where the fuck is it? So anticlimactic.
Dun, 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 dun. Dun, 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 dun.
Energy Harbor. So in March, they bought a company called Energy Harbor that made Vistra the second largest nuclear fleet in the country. And what happened on the back of that? They're the best performing stock and have been added to the S&P 500. So this is all in the past couple of weeks, right? Also, and that's on the demand side. So, also in the past couple of weeks, the Senate went ahead and banned the Russian imports of uranium, which the House had already done, and which, again, Uncle Joe needs to go ahead and sign, and most people think he will. So Russian imports are something like 4 million pounds to the U.S. So you have all these, ducks in a row, things lining up for, sort of that next leg of the uranium bull market that is just continuing to play out. So lots of things there, both on, demand, on supply, on big headlines, government support, financial support, etc. So lots to like in the uranium space, I think. And then to your point, the spot price goes ahead and ticks back up to $93, which is a clear signal that the next leg up is here. So yeah, uranium looks pretty good.
Now look, folks, trend is your friend. It's rare that you have the government, the corporations, the utilities all on the same side of the bargaining table, wanting more nuclear supply. That is as bullish a thesis, and one that actually makes me feel good, unlike the copper missile thesis. This one makes me feel good because it's really nice when private money and public capital and government actually get themselves together and do something that has more longevity and is more forward thinking than just the next 2 years, a la ERCOT, right? Which has had all these problems with the state grid, the state of Texas owned state grid. It's had these problems forever and is finally just now starting to address them. And again, don't forget, folks, in my home state of Texas, people died during the freeze a couple of years ago. And also don't forget that Ted Cruz was lucky enough to be able to go to Cancun on vacation when people were freezing to death. Don't forget that part either. But I digress. Back to uranium. That one makes me feel good. I like that supply-demand thesis, and I like the proposition there. And we've written a lot of uranium company checks here in the last year or two. I think it's going to be a fun ride in the uranium space as well.
Mm-hmm. No, I agree with that. Yep.
I like it. What are you watching in the market, Mr. Hodge? What do you like? What have you bought? What has struck your fancy here lately? Maybe in a more pronounced way, something a little bit more notable.
It's been busy, man. God, we've been trading cannabis stocks. We got the announcement recently from the DEA that they're going to reschedule. I traded the Black Rifle coffee stock, which is the sort of alt-right coffee company. You see people wear the Black Rifle t-shirts and hats. I mean, they beat earnings this week. The stock was up 30% today. The day we recorded this, we took profits in Hodge family office. I'm bragging more than telling you what I'm watching. I interviewed MineHub last week, Andrea Ehringer, and she's really, really sharp. That's where
I was going. I saw that interview. She is sharp, man.
Yeah, she's good. That stock is interesting. That's a 12 million Canadian market cap company that's going to do over 4 million in annual recurring revenue this year. That's like 100% increase in the annual recurring revenue, and it's just not getting recognition for it. I mean, I guess they had a seller in the market that's now bled out. They've already rolled back shares. They've shown they can raise money. They raised like $8 or $9 million. They're getting really close to break even, which she talks about in the interview. And then, she talks about the model, the various ways that they generate fees, and then, software as a service, which, some viewers might know gets a pretty high multiple in the market once you can get to break even and profitability. So the network is really sticky. So they provide logistics for mining, essentially, starting in aluminum and wanting to get into sort of steel and some other commodities. But it's this really big story. You have to sign up and read the interview. You can check some of them out on Resource Doc Digest with Vince Sirachi, who's the chairman. But I guess it's been approved by some of the biggest companies in the world is the most important part. So like Codelco already uses the platform, and then they have to onboard everyone who Codelco uses, right? All the shipping companies, all the suppliers, the chemical suppliers, the smelters, the shippers, et cetera, et cetera. And so those then become not necessarily clients, but at least users of the platform that they can then, work on a sales process with. And so they're working on those sales funnels. They're adding a salesperson. And again, some of the biggest companies in the world are using this, like Sumitomo is using it, has given them capital, for example. And so anyway, it's just exciting. They're adding clients, they're ramping up sales, they're doubling annual recurring revenue. And she's just got appointed to the board this year. She comes from another company that MineHub acquired last year. I mean, it's a good story. The numbers starting to add up, and if you have some time, go check out some MineHub. It's interesting.
No, it's funny. I was going to say MineHub as well. I think, the market cap it has, given the moat that it has, right? The first mover advantage in the industry. I mean, there's nobody out there that has figured out how to profitably digitize the commodity supply chain. And the commodity supply chain, when I've spoken to, the chairman, Vince Sirachi, is just the start. It's just the tip of the iceberg. Once they master, and they're getting there because you don't have the biggest companies in the world throwing money at you to help you expedite your technology. But once they master and have this part of their business, the commodity supply chain, I've spoken with Vince. He's been really adamant that this is just the start. We are going to absolutely expand into other sectors. And again, at the end of the day, I'm a simple guy. It's just an algorithm, right? So once you do it for cocoa, you can do it for clothes, you can do it for makeup, you can do it for whatever the hell you want to do it to. Just get the damn algorithm right, and they sure do look like they're getting that down to a T. Tiny company. Where's the market cap, Nick? Let me take a peek.
$12.6 million Canadian.
Yeah, 12.6 million Canadian. I'm biased. I've written 2 checks. I haven't sold a share. I may add at current levels. Love what they're doing. Nobody else is doing it.
These are stocks no one's paying attention to. Like
at
I
all.
was on the OTC side last week. I was the only buyer one day of the week. Nobody was paying attention. So I think that's going to change. And it's still done via spreadsheets. So you should check out the interview. But I was asking about the technology and stuff, and she was like, Nick, sometimes we literally just have to enter the data for them. That's still on a spreadsheet to get it into our system or whatever. It's crazy, man. So anyway, very, very much low hanging fruit and a lot more to pick.
Yeah, I my brain. I envision Joe Biden going, Andrea, can open my phone for me? Anyhow, I'm supposed to remind you all to go to dailyprofitcycle.com/subscribe to go hear my latest rantings and ravings, and every now and then insights, along with Mr. Hodges' insights and wit and intellect, and our talented group of awesome editors. Everything from crypto to tech stocks, cannabis stocks, resource stocks, thoughts and opinions on the world. It's all there, and it's absolutely free, completely independent site. So a lot of information on there. I know when I first got started in the business, free information was the holy grail for me, because all I had to do was search for it and then digest what I thought was believable and go from there, right? And that really opened up my due diligence process and really helped guide me in some decent directions that luckily have turned out well for myself and family and friends. So yeah, I encourage you to go get all the free information that you can. And if you want some of the not so free information, there's links on there for some of our paid services as well, where we actually give stock recommendations and buy and sell calls and a little bit more nuance to our thoughts than what you get here on the podcast. Mr. Hodge, I'd be remiss if I didn't talk about the Patriot Battery Metals news this week. They found a new high-grade zone. I'm not calling it another CV5, but I'm not calling it another CV5. It's a new high-grade zone, and it's discovered at CV13. And this is really important because we already have the one at CV5. For them to be finding this type of mineralization, we're talking 21.9 meters at 3.58%, 34.4 meters at 2.9%, and multiple samples that had over 5% lithium in it. To find something that far away from the Nova high grade zone and from CV5 in a completely separate pegmatite cluster, it's got the market giddy, the stock's actually responding, it's got me giddy, and I tell you why else I'm giddy, aside from the fact that it's my largest personal holding, because the MOU with Albemarle is expiring soon, and I don't think it expires soon. So I'm looking forward to that news. Hopefully in the next week or two, we get an update on next steps with Albemarle. I can't see that partnership as seemingly positive as it's been all of a sudden just fizzling out. And I know that Albemarle has a desire to get into Quebec and Canada and help establish that critical metal supply chain. I think Patriot and Corvette are going to play a huge part in that over the next several decades. So kudos to Patriot. Congrats to the team out there doing some phenomenal work. I still think you should talk to retail shareholders a little bit more, but that's just me.
You got to get your story out there, right? If no one's around to hear the tree fall in the woods, no one knows if it makes a sound.
That's it. But hey, keep up with the great work. Ladies and gentlemen are absolutely crushing it out there. And I think slowly but surely the share price will continue to respond to that positive news, along with the bottoming in the lithium price and what I think is going to be a second half that sees some deficits and price pressure that goes that way instead of the way it's been going for the past 9 or 10 months. So that's all I got. Anything else you want to get off your chest, Nick?
No, lithium, I think, has been a laggard to respond to this, reignition of the commodities, but I think it is reigniting. I think it's, up off its lows, as they say, the lithium carbonate price I'm talking about. It's been sideways for a couple of weeks, but I would say the tendency had been to sell that group of stocks, and it looks like that's starting to turn around, as evidenced by the response to the Patriot news that you were just outlining there. So, yeah.
I like
Even
it.
lithium's starting to look good.
Even lithium. We just smart again, even with lithium and Patriot. Look at that. That's it, folks. That's all I got. I am Gerardo Del Real along with Mr. Nick Hodge. This was the 269th episode of our weekly therapy session that we call Investing in Bizarro World. I want to wish everyone a phenomenal month, a phenomenal week, phenomenal summer. That's all I got. Nick, send us off with some wise words.
No, that's it. Hopefully you got your Mother's Day gift, which I urged you to do, and you celebrated that this past weekend. See ya.
Hope y'all made the most of it.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.